Welcome back to Karis Investment, where investments are made simple. Guys, on my screen, we're looking at Rivian. Now we're looking at a month's chart. As I told you guys in the past, that I did not agree with buying Rivian above $140 per share. That was ridiculous. If you go back and watch any of my videos, I tell you guys time and time again, the lower you can get this stock is the better it will be for you in the future. Now, in the last 6 months, particularly in the last 3 months, let's just narrow it down. In the last 3 months, we have seen that Rivian touch in the low 50s three times now, right? We saw it touches $50 flat, and then we saw it recovers, and then we saw it touches 57, then it recovers, and then we see it touch $53.50 earlier this morning. We can see for the day that the stock have a high of $60.79 and a low of 53.50. Now, we do have 12 million volume that's riding high. There's a lot of people that's scooping up shares at these prices. You cannot go wrong in the 50s for Rivian, right? In a simple, straightforward um, conversation in investing, buy low, sell high. That's just the simple principle. Now we're looking at a company that have a huge upside to it, and we're seeing the stock price in the 50s. This is almost 48% lower than what its IPO. This is a great entry price. If you guys got in this morning, I've made a ton of trades. Unfortunately, I wasn't able to create any videos because the market was a shopping spree. We look at Tesla was at 700, Rivian was low, Neo was in the low 20s, Lucid was breaking 22 back down to 21, 77. So there was a ton of different opportunities that I think it was perfect timing to go in long term to lock up some shares if you could. Listen, guys, the lower you can buy a Rivian is the better it will be for you. Now, great news is that we saw the expansion side, the production side in the state of Georgia. We have some great news in that. That will help to push Rivian forward because the main concern with Rivian, obviously, is how much they can produce. And this is a straightforward concern by the investors on Wall Street. They want to know how much can Rivian sustain this shortage of chips, which is still a main concern for many of these manufacturers now, is the shortage of chips that's creating a headache for anyone that's in this space. But Rivian is in a great position with the second site in Atlanta. Georgia, we're looking great in that sense. So if you want to get in, guys, I would tell you anything between um, 50 to 60 in that big $10 gap is a great price. Even above 60 is still a great price, but if you can get it as low as you can, I would suggest to buy and hold your shares long term. Now, we saw the price starts to rise as we're speaking here. Now, we saw it was down just around 935. We saw it breaks 54, and then we saw a small recovery. It went up and break $60 in the earlier part of the morning, but now we saw it have a small pullback right below 59, but then we saw it starts to break $60 again. So if you can get in and hold some shares, I would highly, highly recommend it, guys. Listen, it's an opportunity. If you could buy any stock at a low price, hold it and sell it. That's just the bottom line for anyone that's watching this video. Guys, as usual, it is up to you to make sure that you're doing your research. Make these decisions, guys, after doing your research. Um, Keep in mind as well, there's an earning reports that's coming up, I believe, March 10 or 14. We will have to double check that as well. So that's going to be a key factor in the stock price to see where it stands. Now, I don't think the earnings report is going to be good, but most thing what they will try to drive is that how much they can produce by the end of the year. So again, guys, like, share, and subscribe. And until next time, peace out.